Thanks, Tim, and good morning, good afternoon, everyone listening. Today, I'd like to take you through Q Energy and a simple story of a scale change in FY22 and continued growth from oil and gas production in FY23. You can move on, please. Please take time to read the important notices. As mentioned by Tim, Q Energy is an oil and gas production company. We have revenue from 4 geographical areas in New Zealand, Australia, and Indonesia. And in FY22, we went through a significant scale change, which doubled our revenue and is now the baseline for our future company. We generate strong cash, which we'll show through our results. And we have high activity levels in FY23, which will contribute to expected continued growth. Our market capitalisation is around the $50 million mark. We have a very low EBITDAX multiple. We have a very high EBITDAX margin, which we'll show you on our financials on the next page. So in FY22, we recorded $44 million of revenue from oil and gas production, $16 million after tax profit, which is up 200%. Revenue was up 100%. And we have an EBITDAX measure, which is up 180% to $29 million for the year. It's about over 60% EBITDAX margin. Our production of oil and gas for FY2022 was over 600,000 barrels of oil equivalent, which is a mix of oil and gas. We have low cash costs, $23 a barrel of oil equivalent, which in last year's oil price environment led to a gross profit margin of $102 per barrel of oil we produced. Next, please. We produce oil and gas from 4 geographic regions and 7 projects. In New Zealand, we have offshore oil production from the Maari Manaia fields, which have been in for over 10 years since initial production. In Central Australia there, we acquired a project with 3 fields called Mereenie, Palm Valley and Dingo in late 2021. That was an acquisition that has contributed to our production during FY22. That's gas production onshore Australia, which is connected to both the Northern Territory and East Coast gas markets. In Indonesia, we have 2 projects. The Sampang PSC, and that stands for Production Sharing Contract, which is the license mechanism in Indonesia. We have an offshore field which produces gas just off Madura Island that goes straight to power for East Java. Q owns 15% interest in that project. And our growth project is onshore oil production in the Mahato PSC in central Sumatra, up and to the left there. So 4 different geographic areas, 7 different projects, all contributing revenue, gives a very good risk tolerance for any changes in any one project. We have corporate offices in Melbourne as our head office, and we have an office in Jakarta staffed by Indonesians who are good history in oil and gas, who help us manage our production in Indonesia. Next, please. FY22 at $44 million revenue was double FY21, and our highest revenue for at least over 5 years. We'll show in coming slides that this was a result of both organic growth, reproduction in Indonesia onshore, and acquisition of Central Australia assets. And we expect this to continue. We have near-term production growth through drilling in Indonesia. The Australian onshore projects we're running have only 3 quarters of revenue contributing to FY 2022, since the acquisition was in October 2021. So we've got another quarter of revenue there and growth through drilling in Indonesia. Bulk of the revenue you can see there came from Indonesia during FY22, with contributions from Australia and New Zealand. Next, please. So we produced over 600,000 barrels of oil equivalent in FY 2022, 60% higher than FY 21. And by country, most of our production came from Indonesia, 57%, Australia 30% and New Zealand 13%, with 65% of our production coming from gas. Now that's in Australia, that was again only 3/4 of the year where Australian assets are included, so that's expected to increase by an extra quarter through FY23, and Indonesia production is expected to increase as we move on, and I'll show you the growth of our projects there. So this is our onshore Indonesian project in action. This is a Mahato PSC, and what we're seeing is onshore producing oil wells in the foreground and drilling in the background. This is our growth story, production and continued drilling. Next, please. So the Mahato PSC, which is onshore Indonesia and Central Sumatra, contributed $15 million to our revenue in FY 2022. And what we're seeing in the image there is a schematic of the field. The blue line outlines the permit area, and the green inside there outlines the expectation of the size of the field there. We put the field at 93 million barrels of oil in place, and that would equate to approximately 21 million barrels of oil that are recoverable from the field at a gross level. The green dots represent the wells that have been drilled over the last 12 to 18 months and are producing 5,500 barrels of oil a day. And the real story for FY23 is the pink and red dots. These are the 10 wells that we'll be drilling at a rate of approximately 1 a month over the next 10 to 12 months. And if we continue to the next slide, please, it shows you how that translates into potential growth of production from the field, with the blue representing the actual production up until July, and the grey representing the production from the field, which could be expected to double if the results we're seeing in the first 2 wells, which were drilled in June and July and achieved 1,000 barrels a day and 800 barrels a day. If they continue, we can expect that we would see a doubling of production from the field over the next year. So that's 10 more wells to be drilled, all production wells into a known oil producing field. The wells are approximately 6,000 to 7,000 feet. It takes a month from spud, the start of drilling, to connecting to the infrastructure we have in the field and selling the oil. So 10 wells, 1 a month for next year. Next, please. Also in Indonesia, we have a gas project from Sampang Offshore, Sampang PSC. This is the gas plant, which is in part of Q's interest. And if we move through the next slide, we can see the growth that's going to expected to come from this field. So at the moment in FY22, the Sampang PSC contributed $12 million in revenue, and this is from existing fields with fixed price gas contracts that go straight into power to power East Java. The growth here is through a new project, which we call Paus Biru, Blue Whale in Indonesian, which was a gas discovery in 2018 that we expect to FID and develop towards the end of this year and develop moving into next year. That's expected to add 20 to 25 million cubic feet a day of gas to the field production by 2025, which will translate directly into a new revenue source. So we're working on the FID at the moment. The FEED's completed. There are some approvals from the government which are still pending, and we'd expect to have the FID presented for approval before the end of the year. It's a very simple project. There'll be 1 well drilled into a gas discovered field. A wellhead platform, which you can see on the left of the screen there, will be built. A pipeline goes 27 kilometers under the sea, and then it all then connects into existing infrastructure, which is the Oyong wellhead platform, which you can see in the photo, which is already there, and the gas processing plant, the bottom photo, which is also already there. So it's a very simple development, which when we get moving, we hope to move quickly on. Next, please. This is a photo of current drilling onshore Australia. That's in Palm Valley field. which is just around the Alice Springs area. Of course, just around means a couple of 100 kilometres away in this sense. You can see the field there. Next, please. So these are our Q's onshore Australian assets. The Mereenie, Palm Valley and Dingo fields, which we acquired in October 2021. The operator there is Central Petroleum, who's another ASX listed company. For the 3 quarters since the acquisition was completed, Q recorded $8 million of revenue from these assets. The oil and gas, predominantly gas, comes from these fields, and we can see the pipeline infrastructure in the black lines that connects the fields through to the Australian east coast. There's some oil that comes out of Mereenie field, which also gets sold at market prices into South Australia. So anyone who looked at papers over the last few months, especially in the east coast, would have seen the dramatic rise of spot gas prices and the continuing call on demand for gas into the east coast market. We are connected into that east coast market. And we just announced yesterday a contract for sale of gas to Shell Energy Australia into 2025. So what we're seeing is the demand for gas being high, that companies will be locking in gas to 2025, 2 years away. There's growth in these fields that we expect to happen over the next 12 months. We'll see that we are currently drilling in Palm Valley, which is currently happening. And we can expect to get some results there over the coming weeks as we get closer to the end of the drilling. In the Mereenie field, which is existing gas production, we are also planning to go back and look at 6 of the existing wells, undertake recompletions to make them more efficient and get more gas out of those. That's a low cost way of making a well production more efficient from each well. We also expect that in FY23, there will be 2 new wells developed and drilled in the Mereenie field to deliver new gas and supply more gas into the East Coast market. The next slide, please. We will talk about the current drilling, which is a well that's called Palm Valley 12, PV12. It's currently drilling. It started in April 2022, and we're targeting an exploration target deep in the image we see there. It's very challenging drilling conditions, resulting in announcements and decisions that we couldn't continue right to the bottom of the well. So we drilled a horizontal lateral, which also was not successful, and are now currently drilling a horizontal lateral well into the P1, which is a Pakuta reservoir, which is the gas production zone in the rest of the field. Next slide, please. Q's revenue in New Zealand comes from the Maari field, and that gives us about $9 million last year. Next, we can see the commitment to sustainability is on our website. We report under TCFD disclosures, and we have our climate change policy published. On the next slide, we'll see how that all translates into activities for the year. We've got 10 wells in the Mahato PSC in Indonesia, 2 wells being drilled in onshore Australia in the Amadeus Basin, and some recompletions. These are all wells that are due to be production wells. So on the next slide, to finalize the presentation here, why Q? We have a diversified production portfolio, Australia, Indonesia, and New Zealand. We have sustainable results from FY 2022. This is a new benchmark for the company, and it's the baseline going forward. The markets we sell into are oil and gas markets, which are all high demand, and we're leveraged to global oil prices. In FY23, you can expect growth from production wells being drilled in Indonesia, 10 of those, and 2 wells plus recompletions of wells in onshore Australia at the Mereenie field. Thanks, Tim.
Thanks, Matthew. Quite a few questions here. That gas supply agreement with Shell Energy, it talks about a fixed price, a take or pay contract. Can you give us a little bit more understanding of what that means?
Yeah, so the production, the contract, was we mentioned, is due to start in 2025. The fixed price means that we've agreed on a price for that gas in that year. And the take or pay concept of a gas supply agreement means that the buyer has agreed to take the gas, and it's not flexible. There's some flexibility, but fundamentally they've either agreed to take the gas or pay for it. So it's from a seller's point of view, it's a firm commitment to sell that gas for the year.
And sorry, where is that price set then?
The price it's a confidential price. We can't discuss
Gotcha.
that. It's between the buyer and the seller. But as we mentioned in our announcements, contracting this far out gives the expectation there's a strong market for East Coast gas in the future.
Understood. And your Indonesian oil and gas, where does that get exported to?
So it all gets used in Indonesia. The
Right.
gas that we produce goes straight into a power plant that powers East Java. Now that has some great sustainability benefits, as the bulk of power that would otherwise be produced in Indonesia is from coal. So producing gas is environmentally friendlier than the alternate available in Indonesia. The oil also doesn't get exported, it gets used domestically and refined at a domestic refinery in Indonesia. So again, we're contributing to the growth of Indonesia through our energy we provide.
And what about hedging? What role does that play? For example, we've got a declining Australian dollar. Does that play into your hands? What role do you play in fluctuations in your commodity base?
Yeah, so we have, due to our diverse mix of long-term gas fixed price contracts in Indonesia and Australia, and we don't hedge our oil. We take the market price, which has been very good last year and expected to continue. We also sell 85% of our product in US dollars. So the current weakening Australian dollar benefits us as we report in Australian dollars. Also provides a natural hedge for our costs, which are either in US dollars to match the revenue, or in New Zealand or Australian dollars, which gives us another benefit as the US dollar gains some strength.
Matthew, that's all we have time for. It seems very cheap to me on a $16 million net profit, market cap around $50 million. Good luck out there. You've got some tailwinds. Have a nice weekend.
Great. Thanks, Tim.